Stock markets are at an all-time high, even as valuations remain stretched and political risks are high. Joining me today is Paul Mladjenovic. He is the author of Precious Metals Investing for Dummies. Welcome back to the show, Paul. Happy New Year.
Oh, happy New Year to you and everybody viewing and listening in. So I'm looking forward to a great year.
Yes, excited to get your outlook here for 2018. Let's start with U.S. stocks that just don't seem to quit. Are you at all concerned about equities at current levels here?
Well, I've been concerned for a few years. I mean, I still am obviously generally bullish on the stock market as well. I think especially with the Tax Act and some other fundamentals that are driving it, I think it still has more room for upside. I don't know if it was on your show or another show, but about a year ago I mentioned to them that I was forecasting a $25,000 Dow at that time. And so I was that was for 2017. So I'm off like 9 days or so on that target date, but close enough, right? I think for 2018, I think that barring a few things we'll mention in a moment, I think that outside factors, the stock market compared with a strong economy as it is, I think it still has more room for upside. I mean, I don't think it's going to hit to 30,000, but could it be 26 or 27 in that general vicinity? I think it has a strong chance for that, definitely.
Well, we've had many experts coming on calling for an economic collapse, imminent economic collapse. So you're not forecasting that at all this year?
Well, I think the economy, I mean, look, I can do a long dissertation about the economy and what it takes for a strong economy. The economy, I think, turned itself around 6 or 12 months ago. More optimism. There's a lot of strong underpinning in the economy. So I'm not looking for an economic collapse anytime this year. But I think that doesn't mean that there's not going to be a problem with some of the financial markets going forward. I think that among the weakest things out there is the debt bubble. If there's anybody who should be worried, is people who are tied to the bond market. And I think that's going to cause some real issues. And then people are going to start having great concerns, in 2018.
Well, let's talk about your expertise now. Gold. How do you think gold will be affected by the current macro conditions here?
Well, I think there's going to be two things that are going to be watching. That are going to be like tipping points or things that'll help put some real fuel to the upside for gold and silver. I think gold and silver have been, as many of your viewers and many of the visitors at Kitco and other venues know, that there's been a long consolidation process. I mean, 2017 was a bullish year for gold and silver. My expectations were generally met with them from a year ago. And I think there's going to be a bullish year. And now to me, my question is that there's going to be, will it just be a regular bullish year for gold and silver? Or will the upside that many people were counting on or expecting because of other factors out there, will that finally materialize? And I think the two things will be like the fuel to a strong upside for like gold and silver and other precious metals. The first one being is I feel that with the strong economic activity, people move to gold when they feel there's economic calamities or economic uncertainty, but the other side of it is the potential for inflation. I think that with more currencies being expanded and with economic growth and with these the Bitcoin situation, I feel that the fuel is there that'll have inflationary impetus to higher gold and silver prices. And I see strong movement during the course of the year, more likely maybe the second half of the year. But I think that the second thing that I'm expecting will be of all things, the cryptocurrencies, because I think that in many cases, that's going to end up expanding the supply of funds out there. And the point is that a lot of people will end up seeing that these things have volatility. You'll see some minor cryptocurrencies collapsing in the next 6, 12, 18, 24 months. It has definitely an internet stock feel about it. And I feel that a lot of the air will come out. But the point is people will ultimately say, if currencies are inflationary, if there's so much risk involved with the cryptocurrencies and the economy and the world economy, not the U.S. economy, but the world economy becoming more uncertain, you'll start seeing some major moves, I think, into the precious metals in due course.
Okay, so finally, Paul, if we do see that upside scenario play out, what kind of targets are we talking here?
Well, last year I had forecasted, if you recall, I think it was like 1,300 for gold, and that certainly is met. I think that if some of these things, the bond bubble crisis doesn't materialize yet, but it will at some point, and these other factors I mentioned, if those things don't materialize, I could still see gold being at 1,350 or 1,400. I think there's a strong likelihood for that. Silver, same thing. That one has been like the problem child, and I've told other people and other things that I think that silver is like probably the most the most undervalued asset on the planet. I see it being at 20. And if some of these problems and issues, inflation, etc., do end up materializing, then don't be surprised if you see gold north of 1,500 and silver hovering in a 25 or better range.
Paul, thank you so much for your thoughts today.
Thank you for having me, and Happy New Year to everybody.
Thank you, and thanks for watching. We'll be back tomorrow.